Friends, on 20th April 2020, prices of the crude oil fell below $0 mark. What does that mean? How can prices go below $0 mark? Why would they fall in minus? We are here today with this presentation to clear the doubt on this recent phenomenon. Friends, my name is N.R.Yelmo and this video is presented by Educare. Let's see what actually happened. So on 20th April 2020, crude oil price fell below $0 mark in the US. The question arises, how can that be possible? And why would they fall from zero to minus? We have tried to explain the story of this great fall. We all know many war has been waged for this valuable called black gold. And we know that oil prices have been falling over the past few months. They were close to $60 a barrel at the start of this year. And by March end, it had come down to $20 a barrel. This record plunge, it has occurred due to the factor too much supply and very less demand. Let's take an example for instance. Recently we saw dressed broiler chicken were available in the market at around 50-60 rupees per kg, which otherwise would have normally cost around 180-190. So this was due to the reason that there was coronavirus effect, and hence there was a dip in the demand. However, the stock of the chicken was already there in the market. Due to the dip in the demand, the shopkeepers, they were willing to dispose of their supplies in unbelievably lesser price, isn't it? So similar thing is happening in this crude oil field also. When there was a dip in the crude oil demand, price started falling, so much so that it went below $0, that is in the minus. And according to Bloomberg is an international news agency based in the US at New York. Previous lowest was after World War II, which was also below minus. Now the question below minus, below zero still persists. What do we mean by it? Does it mean that we buy the oil and the oil company pay us? Is it so? Yes, that is right. That is how it's going to be. To know further, it becomes important for us to know how the trading of crude oil takes place. So let's see that. Trading of crude oil. To know this, first let us know that there are 160 type of crude oils. And for trading purpose, they are marked by benchmarks. And the two most prominent of them is Brent, which is a brand used in Asia and Europe, and the other one is WTI, the full form of which is West Texas Intermediate, and this brand is used mostly in America. Now trading of crude oil is done in futures market. Okay, futures market, it is like a stock exchange where buying is done in advance actually for future purpose. So if my need is for the month of May, I will have to buy the oil in the month of April. So this is how trading goes. And for WTI, trading is done at NYMEX. NYMEX means New York Mercantile Exchange. Okay. So the May contracts for WTI, it was due to expire in April 21. As the deadline approached, prices started dropping. This dropping in the price was for two broad reasons. One is oil producer, they wanted to get rid of their oil as the storage was getting exhausted. And the buyers, for them also, since the oil is not being sold, they wanted to not to buy, because they have to pay for transportation and again pay for storage also. So both the sides, the oil producer and the buyer, both of them, they were not willing to uh, make purchase or sale. One wishing to sell and the other one wishing to not purchase. Now again, why is this happening? Why the people are not using oil? Is it only because of the coronavirus effect, or is there any other story? Let me tell you the war, oil price war going on between three sides. The first one is USA, of course. The second is OPEC country, and the third one is Russia. Actually, what was happening was in the year 2010 and 11, 10, 11 and onwards, USA, they got a revolution in shale oil production. They got their technical um, revolution, and because of which they were able to extract oil very hugely, enormously. So when USA became a giant in production, now normally the control of oil lies with OPEC countries, OPEC, okay? But OPEC countries is being given competition by Russia also. Russia is also a major oil producing country. Now, to fight off this US threat, the OPEC and Russia, they came into a, an agreement, and they formed an OPEC plus country. USA was producing, Russia is also producing, OPEC country was also producing. Now OPEC country, they wanted, since the demand was dipping, they wanted to curtail the production. So they requested Russia, but Russia was not willing, because Russia wants to, in a way, see the end of US production. Okay, so Russia continued to produce hugely, making the oil cheaper. Now, when Russia is producing, OPEC cannot leave behind. They are also producing, and USA also cannot stop producing. So the story is this: that everyone is producing, and there is a dip in the demand. Now there is surplus oil. So because of this reason, the WTI went in negative. Okay. So our next question here is: can't the production be stopped when there is no storage, no place to keep their stocks? If there is no demand, why aren't they stopping the production? This they are not able to do for this reason. First, restarting the production is very costly. Okay, it's immensely costly. And number two, this a country who stops its production will lose market share if others do not follow suit. And Russia and the other country like Saudi Arabia, they are not willing to curtail their production. Simply, there is a war going on. Okay. Now the next question here is: will India benefit, or will the consumer in India get benefit? Lay customers, we get benefit from it? The answer is, from Indian perspective, although we will get some benefit, but not much. And from consumers perspective, this depends. And as of now, the answer is no, because Indian crude oil basket comprises not of WTI. We buy oil from Brent, and though there is fall in Brent crude oil prices, but not as much as WTI. It did not go in negative there in Brent. And another question may arise, that why don't we buy WTI from USA then in that case? This we cannot do, because it will result in huge transportation cost bringing all the way from USA. Also, another factor is the rupee convertibility is not very congenial at this moment. It is somewhere around 76 against a dollar. So that is also a bad idea. And another thing is, public will get, regarding the public part, they will get benefit only if the government curtails, the central government or the state government, they agree to cut taxes. Normally what happens is, when the oil price goes up, the government, they hike the VAT rate, squaring up the benefit that the public were supposed to get. Now the future of oil price, The future of oil price will depend on demand, obviously. If the demand goes up, the price will come up. If the demand goes down, the price will come down. This is first thing. And number second is, although for May the price in WTI is negative, but for Brent it is not that much, as I have discussed. But for June, this price is still pegged at $20 a barrel. So we have time up to 21st May to know whether the oil price will still be in negative, or will it come down, or will it go up. So the coronavirus effect is there for the oil, and also the which is culminating into a less demand situation. Also, there is a oil war going on between three major countries, as I told you. One is Saudi Arabia, the other is Russia, and the third one is USA. Saudi Arabia leads the OPEC. I hope this video was informative to you all. You do share it with your friends and support our efforts. To do that, you have to subscribe to our channel and stay tuned for more such informative videos.